Hello and welcome to this webinar. Thomas and Urban, nice to see you both and have you both with me. I think we just wait a few minutes until we get started, so we have some time. How are you today?
Hi, Michelle. Thanks. Thanks for welcoming me to the webinar, and thanks for everybody to join. Great. I'm doing great. Really excited to look forward to and to talk and tell a little bit about investing long term.
Perfect. And you, Urban?
Great. Hi, Michelle. I'm fine. The weather is nice outside, the sun is shining, and we have a nice webinar today, so everything is great.
Yeah, I think so too. Here it's really hot in Switzerland. I'm not sure, Thomas, you're in Helsinki. So how's the weather in Helsinki? Maybe we can get an update on that.
Yes, let's say it's Helsinki-like. So it's getting warmer. Yes, it's getting gradually.
Okay,
It's okay.
okay.
For this time of the year, the sun is shining.
Okay, okay. So it's sauna time or sauna weather better.
In the Yes, yes, you definitely want to switch on the sauna in most of the time.
Okay, okay, perfect. So my background is a little bit Finnish sauna-like, right?
It's
Okay,
exactly
it's not, but it could be. So I think we now waited a few minutes. So let's start with our webinar. Yeah, welcome everybody to the webinar. The topic is Intro to Investing, as you might already know, because you're signed in for this topic. Before we start, I just have a few words about the technical setup for this webinar. It will take around 45 minutes. And important for you, we have a chat function, and there we have Karina and Niklas from the Selma team who will answer your questions. So hi to Karina and Niklas as well, here from the office in Switzerland. And as well, good to know for the chat. The chat is private, so nobody will see your questions. So you can ask everything you want to ask. We try to answer all the questions during the webinar, and of course we will have a short Q&A session in the end. If we can't manage to answer all of your questions, we will answer them by email after the webinar. The webinar will be recorded and also uploaded to YouTube, and we will send you the recording after the webinar with email. And yes, we have a little surprise in the end, so stay tuned. And yes, let's start with a short intro, so you know who will be with you during this webinar. Maybe I can do the start. So I'm Michelle. Whenever I'm not hosting webinars, I'm doing social media and try to make fun and interesting content around the topic investing. And I'm really happy to be here in the webinar. Now we can go on. And Thomas, would you like to introduce yourself a little bit?
Yes, sure. Hi to everyone. My name is Thomas. I've been in the financial industry now for more than 20 years, actually close to 25 years. So quite some experience. I hope I can share with you all, mostly on how to invest money long term. Maybe some of you have already got to know me whenever you are, for example, in contact with Selma via the chat or via the email. I might be there on the receiving part, trying to help you with your questions. Welcome to Selma.
Perfect. Thank you, Thomas. And then we have also Urban with us.
Yeah, hi everybody. My name is Urban and I'm financial planner at Selma. There I'm responsible for all questions from our clients about the pension system in Switzerland. Maybe you have already heard something about the first, the second, or even the third pillar. And if all this stuff sounds very complicated for you, maybe I can help you a little bit.
Perfect. And you're also right here in this webinar, I think. So, the agenda for today, we will start with the topic why invest, why you should invest, and then, of course, how you should invest. We will have also a point about sustainable investing, not to forget, and really important as well, the costs of investing. We will introduce you a little bit to Selma, and as I mentioned already, we will have a little surprise in the end. So let's dive directly into the topic. Urban, can you explain a little bit why it makes sense to invest our money?
Yeah, that's a really good question. So why should I invest? So there are several reasons. First of all, investing is a good way to prepare for your financial future. Especially if you invest regularly, you don't have to take care of anything and you can build up money over time. The second point that I think is very important to consider is the pension system. People are getting older and older, and that is basically wonderful. But the result is that there are fewer and fewer workers in relation to pensioners. For this reason, the first and second pillar have major challenges in the future. But I don't want to bore you with these details now, but these pensions will be much lower in the future. Therefore, it will become more and more important to save additional money voluntarily so that you will be able to enjoy your pension. And last but not least, we have very, very low interest rates at the moment. Some even have to pay negative interest on their savings account. In addition, inflation has also increased again over the last few months. This means that you effectively lose money if it stays in your account. But it's important to note that you should only invest money that you can keep invested in the long term. So one can say, in the long term, cash is not king.
What a good sentence. I think this is one to remember. In the long term, cash is not king. So you talked about inflation. I think this is something we read and hear about quite a lot. But can you give us an example or just add some more details to this topic so we get a better view about it?
Yeah, inflation, that is a very difficult word, and it's difficult to explain that. So inflation means that prices rise and the value of the money is falling. You can see this at the moment, especially with oil and gas, or for example, in the last few years with your health insurance. Everything has become more and more expensive. And if everything is more expensive, it means your money loses value. In the last 12 months, we had inflation of 2.4% in Switzerland. Of course, this is somewhat extreme due to the current global situation. Therefore, on this slide, we have calculated an example with an annual inflation of 2%. And as you can see in the graph, the purchasing power of 10,000 Swiss francs changes to 8,000 Swiss francs over 10 years. And this is a large purchasing power loss. That means you can buy way less than today with these 10,000 Swiss francs.
Okay, little bit a hard one, but it's reality, right? So let's go on to the next slide. Now we know about inflation. Let your money work for you. I think that sounds great, but how does this work in practice? Thomas, I can see you have a lovely chart for us. Can you say a few words?
Yes, of course. Well, I guess we all heard that phrase already, let your money work for you. But what does it really mean in reality? That's why we have this chart here as an example, where we assume that somebody can invest money regularly every month for the next 5, 10, 20, maybe even 30 years. And 30 years might sound a lot, but I can really let you know that actually time flies and it goes by much, much faster than you initially think. So prepare for it. And 500 Swiss francs might be an amount of money that many people can actually put aside on a monthly basis. So what would happen if you put money 500 Swiss francs aside every month for the next 30 years? Well, in the black graph, you can see what happens. How much money would you end up with if you put that money only in a bank account with no interest rate, with no return at all? So in the end, after 30 years, you would have saved 180,000 Swiss francs. Sounds also like a lot of money, but as Urban just explained, inflation will make sure that with that 180,000 in 30 years, you will be able to buy much, much less than what you could buy now. Now, what would be the better alternative? The better alternative would be to invest that money and try to achieve a return so that the money actually grows and starts to work on your behalf. For this, we calculate an example of an average return of about 7% per year. Might sound a lot, but actually that was something that was possible over the last years with certain types of investments. So here you see, if you continue to invest 500 Swiss francs every month for the next 30 years, you would not end up with 180,000 Swiss francs, but actually the money would have grown to 500, close to 560,000 francs. So that's quite a substantial difference. And as you see, the longer the money remains invested, the larger the difference gets between having it in cash and having it invested. So yes, you should invest. Yes, you should go for a return. And yes, you should keep your money invested for as long as possible.
Perfect. So I think I have to let my money work for me as well. Good chart. Thank you, Thomas. So now we know why it makes sense to start investing and investing our money. But now I think it's important to know what is investing exactly. So Urban, can you say a few words to what is investing?
Yes, of course. So we see there are two possibilities for investing money, and we differentiate from speculating and investing. Michelle, what do you think we mean by speculating?
Wow, okay. Thank you for checking my knowledge as well. Yeah, I just read investing is not speculating. So I guess maybe with speculating you mean something more like going in the casino, or I think, yeah, that was maybe the last time I did something like speculation, but honestly, I wasn't that successful. But yes, am I heading in the right direction with my thoughts?
Yeah, fully. So this is exactly what we mean. Speculating happens in casinos and is something for day traders. A day trader chooses one single stock and hopes that it will go up rapidly over a short period of time. The profits are mostly dependent on luck, and also it takes a lot of time to get all the information about the stocks and monitor the prices.
Okay, perfect. So now we know what is speculating. Thomas, can you give us an intro to investing then?
For sure. Well, investing is the opposite of speculating. So again, if you invest your money, you should invest it for the long term. Of course, you might have seen advertisements, you might have seen movies where somebody gets rich overnight, but this is mostly happening only in the movies. It only happens in the advertisements. In reality, it doesn't really happen. So what you should do, you should focus on the long term and you should build your investments over time. Try to get a return and then do it for the long term as long as possible. Be patient. That's investing.
Okay, yeah, I think the movie way is also a pretty good way, but not the real way. Okay, got it. So,
Unfortunately, it doesn't
okay,
happen very
good
often.
to know, good to know. We already got information about why we should invest and what investing is by definition. But what do we have to consider when start investing? Thomas, what rules do we have to follow?
Okay, yes, thank you. As we already said, when investing money, you should follow some rules in order to make sure that you do the right thing. First of all, as in many other things in life, when investing money, think long term. We have said that already quite often now, but what does long term actually mean? It means you should only invest money that you can assume that it can remain invested for at least 3 to 10 years. Ideally, it actually should be 10 years or even longer. The rule of thumb is that the longer money can remain invested, the better for you. Just to let you know, if you start with Selma, you don't have to keep your money invested. You can withdraw it at any time. But again, it's much better for you to keep it invested long term. Then, as a next rule, in case you already have money now that you think, okay, I would like to invest that, we would say do not invest everything at once. Markets can go up, they can also go down in the short term. And so if you don't invest all your money at once, but you keep investing over a time, it means that you can also build your investments at different prices. You can better handle possible fluctuations in the market, maybe even benefit from them, and hence also end up with a more stable average price. Also, as we have said, be patient. Do not expect to have for miracles to happen overnight, but really think in years, if not decades, in when investing money. And also very important, my grandmother might have told you that already in the past in many other things, do not put all your eggs into one basket. We call this diversification. So invest your money over many different companies, over many different assets, so that this also helps you to better balance your risks.
Diversify your investment sounds great. And I just read the word ETF. But yes, what are ETFs, Urban?
Yeah, so we have heard now from Thomas that diversification is very important when investing money, and ETF is an easy solution and a great way to diversify your investments. ETF means an exchange traded fund. So as the name says, it's a fund who is traded on an exchange. And the fund is a big basket with a lot of companies in it. An ETF usually covers an entire investment market or an investment topic. For example, the Swiss stock market or the real estate market or even gold and silver. And with an ETF, you can invest cheaply in hundreds of companies.
Perfect. So, good question to ask, I think, at this moment. We know it might sound all a little bit boring, but yes, your feeling is all right. Because if investing is boring, you know you're doing it right. We already heard from Thomas, you can let your money work for you and you have to stay patient with it. So yeah, there is something boring about it. But otherwise, it can look like this and lead into a circle of frustration. Thomas, can you ride us through this bumpy ride so we know what is the circle of
Yes.
frustration?
Yes, here you see in this chart, you see how investments might actually develop. So that when you invest long term, there might from time to time come some crisis where markets go down and where your investments might also go down. What is very important in this, and that's why we keep saying, do only invest money that can remain invested. So what is very important in times like these when markets fluctuate quite a lot, do not panic. Because otherwise there is this certain famous circle of frustration that we try to depict here and where things might not turn out the best way. So normally what might happen if you react emotionally is that you see initially that markets go lower. And then you think, oh my God, should I be worried? What happens? What happens to my investments? And then you see markets might go even more lower, and then you start to panic. So you sell everything and say, okay, I would never like to go in again. Maybe later on when I can buy it back more cheaper. Initially, you might see even markets to go even lower than that. So there might be some kind of happiness that you said, oh, now I made the right move. I sold everything. Even now, why others see that the markets are going lower. Then eventually, and this is what happened all the time in the past, markets turn up again and they recover. And then you follow and see now they are recovering. In the first phase, you won't believe it. You say, oh, but the crisis is not over. So why are markets recovering? Well, they recover because they tend to recover much faster than in real life. And so markets go up, you end up missing the correct time for reinvesting the money for you. Actually, in the end, the markets will go higher than when you originally sold, and then you end up with rising markets and you are not invested at all. So this is why we keep saying only invest money that can remain invested long term. Do not panic, keep calm, and keep your money invested even in times of more turbulence.
Okay, so hands up for all who know the circle of frustration from themselves. Okay, so better to go direct into the takeaways. Thomas.
Yes. So what we have learned from that graph is, well, nobody really knows what happens exactly in the future. Even Selma doesn't know that. But what we do know is what has worked in the past. And if you think about the last 5 years, 10 years, 20 years, and even more, markets tend to go up. And even when they go down, they tend to recover. So keep your money invested and keep remembering that eventually markets will turn up again. Then avoid emotions when investing money. As we just learned in the previous chart, emotions are not a good advisor when it comes to investing. Actually, I always compare it to other things in life where you might also react emotionally. Just imagine you stand in front of a department store, and there you see the sign, "Come in today. Everything is cheaper by 20%." What? Minus 20%? Let's buy. I can buy great things in the department store, things that are much cheaper than they normally are. Well, imagine the same thing happens with the stock exchange, and you see in the newspaper, oh, now the markets have gone down 10 to 20%. Very often you would react emotionally and think, oh, what's wrong? My God, minus 20%. Shall I sell everything? Or is it already too late? What shall I do? And this is completely the wrong reaction. You should ask yourself, should I buy now? Do I get things cheaper than normal? In the long term, markets tend to recover. So emotions are not a good advisor when it comes to investing. So it's important for you to have a plan, to come up with a long-term plan, and also to stick to that plan, even if things might be more turbulent.
Perfect. So we have half time from the webinar, and yeah, I think half time, I would say. And now we know what, why, and how we should invest. So I think it's time to meet the Selma team and, of course, hopefully Selma. Thomas, can I give you the word for this one as well?
Yes, for sure. Wow, here you see the Selma team. So the team behind Selma. I started at Selma about 2 years ago. I was number 7. And now I see that we have grown already quite a lot and will grow also in the future. And thanks to all our clients, of course. This is great. You might ask yourself, who actually is behind Selma? Well, there is the Selma team. There are also investors who own and invest in the Selma company. So there are, of course, private investors, there are founders. On top of that, there are also 2 important other investors for us. You might know those names already. One is Sparrow Ventures, which actually is a part of the Migros group. So I'm sure everybody in Switzerland knows Migros, Migros Bank. and Sparrow Ventures is the investment arm of Microbank. And then there is TX. So this is also, I guess, actually the biggest Swiss media conglomerate. Many of you might also know TX Group. They are also owners, part owners of Selma and investors with Selma. For us, this is great. This is a great proof of confidence, hopefully also for our clients, that companies like this, so both the Migros Group and TX, that they are investors in Selma. They want to be part of the journey with Selma and support all our clients in the future to invest money long term.
Then we can come to Selma, I think. The other really important part about Selma, of course.
Exactly. So now you have seen the human team behind Selma. Of course, Selma is our robo advisor. Selma is your digital financial advisor, and Selma is doing most of the work. Selma is actually already turning about 6 years young, or maybe with a lot of experience. Selma is currently taking care of already around 10,000 clients, and this number is growing on a day-by-day basis. Selma's favorite hobby is to crunch numbers and keeping an eye on your investments 25 hours a day, 7 hours a week. So she is busy all the time, which means she rarely sleeps. So we really love Selma, and Selma will be the one that you actually, as a client, have the most to do.
Wow. Okay. Crunching numbers, keeping an eye on the markets, and rare sleep. That sounds pretty intense. Good that I'm not Selma, honestly. So, how does the starting process with Selma look like? You already mentioned that our clients will have a lot to do with Selma. So, can you explain how this could work or could look like?
Yeah, as I already said, Michelle, Selma is doing all the work and make sure that our clients can focus on other things, other important things in their life, and save time when thinking about investments. So what happens if a client actually starts with Selma? Well, first of all, you go to our webpage www.selma.com, and there Selma will ask you a couple of simple questions, both related to your financial situation and then also to your willingness to take risk. So you will see that chat. Once you have filled in those couple of easy questions, Selma will create an investor profile for you, as we call it. So again, the profile, there you see your cash savings, pension savings. Do you already own real estate? You might have loans or credits. What is your risk willingness? And have you already maybe decided on future spendings? So all these are parts that filter into your Selma profile, and that Selma then will base your investments on. Selma will also give you a recommendation on your investment amount. Actually, the amount that you can invest and that you can invest also in the future basically comes from two different sources. It's first the money that you already have. You might already have savings on your bank account, and you might ask yourself, shall I invest it? And how much of those savings actually should I invest? So when thinking about that number, Selma will also ask, do you have a cash buffer? Cash buffer is like this iron reserve that should always be kept as cash on your own bank account, and it should not be invested. You should keep that money as cash on your own bank account. So whenever you need money for your monthly expenses, then this is covered and you don't immediately have to go back to your investments. We would say that this cash buffer should be about 3 to 6 times of your average monthly expenses. And on top of that, if you maybe already have other expenses planned, like refurbishing your apartment, or maybe even buying an apartment, or buying a car, going on a long trip abroad, this is also money that you should keep as cash on your own bank account. So I think this is also something very unique to Selma, that we would tell our clients, do not send us all your money, do not send us all your money at once, but keep a cash buffer, keep expenses, and again, only invest money where you think that it can remain invested long term. And then, of course, in a second source, there is the money that you will earn in the future. So if you have a job, if you go to work, or if you have a small business, so that you have a salary, or then you have other income. Part of that income should also be used to keep on investing. And this is basically what we call the monthly savings rate and the monthly investments that you can make out of that. Yes, so once you know that, okay, I should actually invest, what you can do then, of course, also online very easily is to open your account with Selma. For that, again, you go to our web pages, and Selma then will take you through that easy step on a step-by-step basis. You can open actually two different type of accounts. So it's the regular investment account, where you can then freely pay in money. There is no upper limit on how much and how often you would like to deposit money into your investment account. And there is also a Pillar 3A account that you can open up in order to save for your retirement.
Wow, that's pretty unique. I think that you have like both accounts, or am I wrong?
It is actually pretty unique.
Okay, perfect. Then it's like that. Investments, I think we talked about a lot, but Pillar 3A, I just have to catch this word and ask our Pillar 3A expert a little bit more about. Urban, can you give us some extra explanation about Pillar 3A?
Yeah, for sure. So Pillar 3A is a way in Switzerland to save money for your retirement. In addition, you're motivated to do so by nice tax advantages. And who would not like to pay less taxes? For me, at least, I don't like paying taxes.
Me neither.
But let's have a closer look at it. So the money you pay into your Pillar 3A is in general bound until retirement. You can withdraw the money at the earliest 5 years before your normal retirement date. But there are exceptions. For example, if you move abroad, buy a house, or become self-employed. But let's come now to the tax benefits. First of all, you can deduct the payment into Pillar 3A from your taxable income. This means that your income tax is massively reduced by that. In addition, the money in the Pillar 3A doesn't have to be taxed, so it's tax-free. However, there is a single tax when the money is paid out, but this is much lower than the taxes you have previously saved over the years. Unfortunately, you are not entirely free to pay in how much you want. Employees with a pension fund, so with a second pillar, can pay in 6,800 Swiss francs per year. And self-employed people without a pension fund can pay in 20% of their net income. But this cannot be more than 34,000 Swiss francs a year. The reason for that large limit is because the self-employed normally have no second pillar, and with this higher limit, you can compensate for that.
Perfect. I think we all have to open a Pillar 3A account. Sounds good. Tax benefits. Never wrong. Okay. So then, Thomas, let's finish the part about Selma. What is the end product I can expect from Selma?
Yeah, the end product is that Selma decides and takes care that you invest in the right way. So based on your profile, you will get your personal investment plan, which is always fully and transparently visible, be it in the mobile app or on the web pages that you can log in. and see your Selma account. And here you see already in this example that Selma invests your money over many, many different markets, many different companies, international companies, Swiss companies. There might be country loans, there might be company loans, there might be real estate, there might even be precious metals. So your money is in part also invested in gold and silver, something that has worked very nicely now when we have seen that markets are more turbulent, because it might protect your market or your investments in times of more turbulence. So again, this diversification that we were talking about, this is actually fully obeyed at Selma. Selma takes it into consideration automatically for you so that your money can be invested long term and broadly diversified.
Cool. Just to say, diversification is also the topic from our Instagram story today on our Selma account. So that fits perfectly. Yes.
Great.
So I love it when it comes to this green slide. It's a topic that is very important to me personally, but I think also to the whole Selma team. Sustainable investing. So maybe I can give the word again to you, Thomas. Can you say something about sustainable investing with Selma?
Yes, definitely, Michelle. Thank you. Well, sustainability is very, very important and very dear to all of us. And I think it will be more and more important also for investing money. So this is why we want to give an option to our clients to opt for sustainable investments. So what happens in your profile? You can choose to invest sustainably, and then Selma will, in the investment account, switch to products that obey and take into consideration these international standards for investing in a sustainable manner. Certain industries will then be excluded. Important for you to know, your money will still be broadly diversified and invested in a very broad way, not in a couple of single companies, but very, very broadly diversified, so that there is still a lot of risk balancing happening. In Pillar 3A, in Selma, of course, sustainability is also taken into consideration when investment products are picked, and sustainability scores are always taken into mind when putting together your investments. So yes, sustainability is very important, and you can invest sustainably with your Selma.
Great, thank you, Thomas. So, as I mentioned in the beginning of the webinar, of course, it's really important to know how much costs you can expect, because, yeah, let's be honest, who wants to pay large fee amounts, right? So, Urban, I think we have a really interesting approach at Selma. Can you talk a little bit about it?
Yeah, sure. So, first of all, transparency is very important for us at Selma. And therefore, it's also important that our fees are very transparent and understandable. For this reason, we have an all-in fee. You can see the different levels here on the left. The more you invest in Selma, the lower is the fee. In addition, there are the product costs of the individual ETFs. On average, these are around 0.2%. And I think the question is now, what do I get for that? And firstly, Selma stands for independence. We can choose the ETFs that we think are the best and most efficient for you. Secondly, we make investing possible for everyone. The minimum amount for the Selma investment account is 2,000 Swiss francs, and for the Pillar 3 account, 500 Swiss francs. In addition, Selma also supports regular investing very, very much. And there are no additional fees for that.
Wow, okay, no extra fees. That sounds not that familiar, honestly, to me. Can you give us an example?
Yeah, sure. So, for example, if you want to invest 10,000 Swiss francs, it doesn't matter from the view of the fees if you invest all at once or 5 times 2,000 Swiss francs. So there is no extra fee for that, no additional transaction costs.
Pretty cool, I would say. Pretty cool. So, yeah, let's talk about Selma's community, because I think Selma wouldn't and couldn't be what it is today without our community. How can I say? We strongly believe that we want to achieve progress together with you all, with our clients. So first of all, we think we have a few things we really like to stand out. So, and first of all, we think there's nothing more important than family and friends in your life. And thanks to Selma, because now you have time to spend with your family and friends. That's why we started our Refer a Friend growth option. So Thomas, as you said, you're working in the customer support. So how many times you came across a client who were referred by a friend or a cousin or whoever?
Actually, this is very common. So thanks to all our clients out there who keep on referring Selma. Of course, you're not obliged to do that, but in case you like Selma, you are happy with how things are handled, you can always maybe mention it to a friend, or you chat on a table over a drink, maybe with somebody who asks, actually, do you know somebody where I can invest my money with? So in case you would like to refer Selma to somebody, you can actually earn a benefit. You actually earn real money. So for every client that you refer to Selma and that has added your referral code, as we call it, you will actually get 34 Swiss francs in cash paid into your Selma investment account. So, and this is true for every single new client that you can bring to Selma. So, for example, you can do the math. If you might have bring 10 clients, that's already 340 Swiss francs. If you want to invite even more, you might end up with a nice amount of money.
Yeah, so I think we should all do a big dinner party with family and friends and then referring Selma. Yes, and of course it's we really choose pink as the color for this slide because we want to spread some love with Selma, and it's always good to refer cool things to your friends. As I already said, we want to build Selma, or better, our product for you. So your opinion, your thoughts, your ideas are really welcome and really important for us. So that's why we have the Facebook contributors group. Everybody can participate there. And you will get some sneak peeks from new features, or you can even try them before we implement them into our apps. And yes, I would be really happy to meet you all there, because honestly, I'm in charge of this group. So yeah, come over and say hi. That would be great. And as you can see on the screen picture here, we also have like an open roadmap for Selma. And yes, now there you can find a lot of informations about our North Star and where we want to go with Selma. As you maybe already mentioned, we have like in the polls section, we have some questions about event locations. We not only want to meet you in the Facebook contributors group, but also doing more offline events and network possibilities. So yeah, just fill out this little survey. In which city would you like to have real life offline events with us from Selma? Maybe I can give you some minutes for that. Urban, Thomas, do you have like a favorite city where you want to come and have an event?
I love Switzerland, so every city is a good
Perfect
city.
answer. Urban, do you have a favorite?
Yeah, sure. I have to say St. Gallen.
Yeah, what a surprise. I already calculated this one, honestly. So thank you all for voting for your favorite city. And yes, so finally, all good things come to an end. But we're really happy to answer some questions. And I will just check the chat. and see what questions we have in. So, oh wow, I see one from Chantal. I think that's an important one because the question is today a good day to start investing because of the actual situation at the markets? Maybe Thomas, you have a few words for this question.
Thanks, Chantal. That's a really great question, and many people are asking themselves such a question every day. So when I want to invest, when is actually a good time to start? Well, as we try to tell you during this webinar, you should only invest money that you can keep invested long term. And when you think about this, then actually every day is a good day to start, especially if you don't start with all the money that you would like to invest. So yes, come together with a plan, stick to that plan, start investing, and then build your investments over time. The best is by investing regularly. And so there will always be ups and downs in the markets. Currently, as you might have seen, markets are more turbulent. So they have come down due to various reasons. The war in Ukraine is one of it. But that also means that now you can already buy cheaper than 3 months ago. So yes, there is actually every day is a good day to start, but keep remembering the rules that we told you. Do not invest everything at once, only invest money for the long term and invest regularly.
Perfect. So honestly, I already choose a question for you, Urban, because I found one from Robin, and he asked about bigger cash amount. So he mentioned that you have 50K in cash. So what would you recommend? How should he start invest that money?
Yeah, that's a good question. So first of all, I think it's important to consider how much of it you can really invest in the long term. Think about how much you need as a cash buffer and whether you have planned any larger spendings over the next years. This money should not be invested. As an example, you have 50,000 and want 10Ks as a cash buffer and no larger expenses are planned. In that case, you could invest 40,000 Swiss francs. But we would recommend not investing all at once. We recommend investing a third at the beginning and the rest with a monthly payment over 2 or even 3 years, so that the full amount of 40,000 Swiss francs is after that time period fully invested. This can reduce the risk somewhat.
Okay, so really cool to have like a little example or just like a calculation. I think that's really helpful. Hopefully as well for you, Robin. Thank you for the question. Yeah, I think a lot of questions are already answered by Niklas and Karina, so thank you both for that. Maybe do we have another one? Just let me check. Oh, there's just one new one. Sebastian asked if he can withdraw his money at any time. I think you mentioned something about that, Thomas. Maybe you can give an answer on this question.
Yes, definitely. Thanks, Sebastian, for the great question. So, yes, depending on the type of the account, of course, but for the regular investment account, these are your investments. This is your money. You can withdraw from it at any time and free of charge. Again, of course, we would recommend to keep the money invested long term. But if you need the money, if something unexpected happens and you would like to have your investments back or your money back, you just contact us and we can sell your investments at current market prices and transfer the money back to you. For the Pillar 3A, as Urban already explained, there are certain rules, so you cannot withdraw money prematurely prior to your pension in normal circumstances. There are, of course, a couple of exceptions where you might be able to do that. For more details, of course, you can always ask us and come back to us.
Perfect. Thank you for this answer. I just realized, honestly, that we're pretty close to 50 minutes. And in the beginning, I said it will take around 45 minutes. So maybe we have to go on, to go further on. So if we don't have asked your question until now, we will do that definitely afterwards by email. So as I promised in the beginning, we have a little surprise for you. And this is the code, Investing Rocks 25. When you open your Selma account, you'll get a 25 Swiss franc bonus on both accounts. But of course, you don't have to open both accounts. You can also just easily start with the investing account or the Pillar 3A account, because we now know about the tax benefits of this one. And yeah, try out if you like Selma, and then add the second account if you like to, or however it fits to you. But yeah, use the code InvestingRocks25 and get your bonus. So that's, I think, the last slide from this webinar. Thomas, do you have a few last words to say for this webinar?
Well, first I will want to say thank you to all to our listeners. I had a lot of fun. I hope that you also received some important information for you. And of course, it would be great to welcome all of you to Selma.
Perfect. And you, Urban, what is your end sentence for the webinar?
Just one sentence.
You can do as much as you like. I think we will see how many people will stay in.
So first of all, thank you to everyone who stayed until the end. And I hope I was able to give you some input on the topic of investing, and for sure also for the topic retirement and pension system, and of course about the topic taxes. Thanks a lot and have a nice evening.
Perfect. Thank you. So after the nice words from you both, I honestly don't have much to say from my side. Thanks to you both for being with me in this webinar. Help me through, give good advices and explanations about the topic investing. Thank you all for being part of this webinar. To all our clients, to all the webinar viewers and listeners. And yes, thank you for the nice questions. And I would say we wish you a great and sunny evening. See you.
See
Bye.
you. Have fun.
Bye-bye.
Bye-bye. Bye-bye.